Good evening and welcome to the earnings review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from the Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with competent market analysts just to ensure you're furnished with relevant and comprehensive market analysis. Tonight, we focus on Turnall, a listed industrial on the Zimbabwe Stock Exchange. And joining me for a conversation in as far as their operations are concerned is the Equity Access Chief Analyst, Respect Gwenzi. Respect, good evening and thank you for joining us on the earnings review.
My pleasure, Ibn. Thanks for having me.
Fantastic. So as a means of progressing, we will just have a quick look at the basic operations of the firm in as far as the history, as well as the most recent developments where Turnall Holdings is concerned. Now, for more than 75 years, Turnall has been the market leader in the manufacture and supply of fiber cement roofing, water and sewerage pipes here in Zimbabwe. Key markets for Turnall include the low-income housing sector for building products and local authorities, as well as municipalities for piping products. The firm, of course, has a footprint in the region wherein it has distributing outlets in South Africa, Mozambique, Zambia, as well as Malawi. We'll go through the timeline as a means of jogging you through where the firm has been over the past several decades that it has been in operation in this part of the world. Now, Turnall Holdings has got a protracted history stretching back to 1943 when a gentleman by the name when the Porter's Cement Industries Harare Works first produced its first asbestos cement sheets. 1947 would mark the firm's Mutare concrete pipe plant commissioning. 1949 would mark Bulawayo's first production of asbestos cement sheets. 1953, Turnall and Newell bought out Alfred Porter. In 1962, bulk cement silos were installed at both the Harare as well as the Bulawayo plants. 2002 would mark the listing of Turnall on the Zimbabwe Stock Exchange. 2004 would mark Turnall's automation and computerization. 2008, the firm started the manufacture of asbestos-free products destined for export markets. Now, just to look at how the firm is actually organized, Turnall trades as the Turnall Fiber Cement, which is of course the holding company with two major subsidiaries, which are the Turnall Buildings Products as well as the Turnall Piping Products. Now, of course, this is a firm, as I indicated, that is listed on the Zimbabwe Stock Exchange. We'll take a break. When we come back, we'll get into a conversation in as far as the most recent financial results are concerned for Turnall. Don't go anywhere. Welcome back. Still with me on set is the Equity Access Chief Analyst, Respect Gwenzi. And so before we can get into a further conversation where their operations are concerned, the firm recently held an analyst briefing wherein they presented the financial performance of how the firm fared over the 2020 financial year. Let's have a look.
Which we have published. And I think the chairman introduced me as the finance director. As you are aware, I recently left, but I'm here to just get this through. You've seen our volumes for this year, they were 9% above the previous year. So our volumes were up. Although turnover was lower than the previous year, it was 4% lower than the previous year. During this period, particularly in the second half, our sales were mainly in US dollars, and these sales were converted in the official rate. So you find that the sales, they are not quite reflective. During that period, our sales were ranging up, we're about 70% of our total revenue being in US dollars. Then exports, I'll touch on export volumes, which were lower than last year by 43%. I think as we got more US dollars locally within reduced reduced our activity on the export market, where we are uncompetitive. But however, the company remains active if there are any orders that are there which are viable. Looking at the profit, we recorded inflation-adjusted profit of 164 million compared to 433 million for the previous year, which was down. We realized also we had the monetary gain. Our monetary gain came down from 325 million to 114 million. In terms of the Zim dollar figures, our profit increased from 17 million to 78 million in the current year. I would say on the balance sheet, I would just mention that we did not do a valuation of property, plant and equipment. That's why those figures are quite low. The last revaluation was done in 20.
And that, of course, was the footage or some visuals from the analyst briefing for the firm. And now respect quite a performance there with some of the key aggregates there being indicated. Revenue sliding in inflation-adjusted terms from $1 billion to 999 million Zimbabwean dollars. Gross profit sliding from $340 million to 330, and of course the bottom line there, the profit actually sliding from 433 million Zimbabwean dollars to 164 million dollars. Just in a nutshell, what is your analysis of the performance vis-a-vis the macroeconomic framework that the firm has actually had to fare?
Thank you, Ibn. I think 2020 generally it was a challenging year for business, economies, and obviously individuals reliant on the productive sector. Why? Because this is a year where the global economy contracted, our local economy also contracted. But when you look closer home, there were a myriad of factors that contributed to that. We saw GDP coming off as a result of a drought and as a result of a whole lot of economic restructuring which was going on, which was buttressed by some stringent measures, expenditure measures by the current government. So all these factors were really militating against spend, that is consumer spend. So we saw construction activity slowing down. Initially, government had budgeted that they would spend a significant portion of the national budget on infrastructure investment, which obviously would mean demand for some of these kind of materials that are produced by Turnall. So there was a slowdown or a rollback as the year went by, and a reallocation of some of those funds to critical sectors such as health and so forth. So it really meant that demand generally was quite depressed. But when we then zero in on Turnall, I think there's a number of factors at play. This is a company that had deliberately looked into the region for as a possible market. And in the period under review, there was almost a 40 to 43% decline in exports into the region. This is due to supply chain disruptions during the Covid19 pandemic lockdown periods. So this obviously had a huge factor in influencing the flow of income. But all the same, the company said that most of the sales were really local. And on a positive note, even this locally generated income was mostly in USD. So what you would then see is an implication that arises out of the exchange rate. You are supposed to convert your USD earnings at the prevailing exchange rate. So in case, suppose for the first 4 months of 2020, you generated 100 million. The official exchange rate then was 1:25. So when you're converting 100,000, you are like saying you have got 25, you have got 250 million. Whereas that's how you should account for it. But in real case, that's not the real earnings that you have in your bank account. Because possibly you're still holding on to that money as USD. And maybe by December, that money was now worth 81 according to the official exchange rate, And maybe when you even choose to use the parallel market, the rate was far much higher. So I think that revenue slowdown is an implication of this exchange rate determination, whereas in the first half of 2020 we had a fixed exchange rate of averaging 1:25 before the coming on board of the interbank, the revamped interbank, which then saw prices moving in line with more of market fundamentals. So there is this revenue decline, which is as a result of the accounting of the USD generated income. And obviously when your top line has been affected, you would expect the gross profit position to also decline. And when you look at the net position, it's now also a function of other items such as revaluation of assets. In 2019, there were sharper revaluations compared to 2020. Why? Because half the time, that is from half year to full year, we saw that there were low movements in the exchange rate and also in inflation, so you would have lower revaluation gains there. So obviously these factors also weighed on the profitability, but all the same, they emerged with a profit position which is about 100 something compared to about 400. But I think in essence, the performance for last year could have been better if accounted for by a different measure, if they were accounted for, say, on the same base of US dollars.
In recent years, their export earnings have proved to be perhaps the dark horse with possibilities of growth in a sense. But over the period in question, there was a 43% decline as far as the export earnings are concerned. What does this speak to? Can we expect a change in the particular matrix as we're getting into the second half of 2021?
Yeah, so I think the export market has to be looked at from two different dimensions. You are possibly looking at demand. Do we have demand on the outside? And I'm sure it has proven over time that there is real demand for the company's product in countries such as South Africa, Mozambique, and so forth. So what's really a challenge there has been much of a supply side issue, where you are supposed to import some raw materials to the processes of your production. And these raw materials are subjected to availability of US dollars. And when you look at the availability of these funds on the interbank market, it was quite low in the 2020 financial year. So what would then happen is a slower movement in terms of production, and a lack of, you fail to supply your foreign markets adequately and timelessly, and you have got higher production costs because you're possibly producing less as and when you get money, and the implication there is that your overhead costs are far much higher. So I think as a result, your product also becomes less competitive in those regional markets. But I think if you look at it more pragmatically, between 2019 and 2020, you've got a 2019 year which had Cyclone Idai, and Turnall had some demand coming from the Manicaland side and also into Mozambique. So they were able to supply. They had running contracts with some customers in the Manicaland region, as well as the Mozambican side of things. So this spurred demand in that respective year. So there were a lot of reconstruction activities that were going on, and they were key participants in that respective year. And if you also look at the if you look at tobacco and what was happening in those respective years, they came up with sheets, some eco sheets, which are also used in the tobacco industry, and that was boosted by the performance of tobacco in that respective year. So I think as we go forward, these markets can be reignited. Why? Because we have got low disruptions of supply chains as we move out of the Covid-19. We've got improved availability of foreign currency. They said that most of their income is now generated in forex, which means they can buy their raw materials on time. And also the regional markets will have sufficient demand because they're also emerging from the same challenges that we are having around COVID-19.
And then, of course, one of the key developments to do with Turnall at this point is the issue to do with the change of guard. We've seen a lot of managerial shifts. The CEO, the MD, Roslyn, is out. You also have Sam Mavende out, and you've got a new team right at the helms spot of the organization, with other shifts also having taken place within the organization. Not, of course, forgetting the change of guard even at the post of the chairmanship sometime in 2020. What could this spell for Turnall?
Yeah, I think change is something that's normally treated adversely. Whenever you have got these constant changes, it reflects on the quality of business. You don't need a high turnover in any kind of business, high employee turnover and high management turnover. Why? Because it has got a strategic implication. Every new management that comes on board has a new strategy, and therefore there is a discontinuation of some of the activities that would have been taking place at a strategic level. So I think it's a minus. It's something that I think all investors are worried about, this constant change of guard. I think in 2015 there was a change of guard, and then in 2018 thereabout, and now again we're seeing another change. So I think it worries shareholders, it worries investors, and it speaks more about the quality of management that the company has been able to attract over the years, which is quite on the low side. But if you look at the new present management, an experienced industrialist who has got a regional thrust, and this is exactly the kind of person that they would possibly want in this kind of situation. I personally believe that Turnall has got a lot of untapped value which can be unlocked. They have got quite a market leadership. They've got also a product that's appealing in the region, and they can do more. They've been industrializing, they have been capitalizing their operation. It's now time to kick off.
Can we speak a little bit about the export foray of the firm, where they've got distribution options? Of course, you did allude to the fact that they early on benefited from the Cyclone Idai and operations of such nature. Do you think that they would stand a chance within the region in as far as expanding their operations in that particular regard?
I think they have got a very big chance of making it in the region. Why? Because they are strategically positioned. When you look at the aspect of proximity to market, they're quite closer to the market than most of the suppliers that guys in the region rely on. So you could have a cost competitive advantage, which I think is their biggest advantage. And so, yes, I really think that they do have got an advantage, and they do have got a chance of playing in the region at a bigger scale.
I realize. Now, can you give us an outlook in terms of your perspective, in terms of how this firm will proceed during the course of the year, getting into 2021 and 2022?
So if you look at construction, it's quite big, but then if you narrow down construction to house building, I think you would then realize that most of it is dependent on how the economy pans out. The more the economy reignites, the more people are getting mortgages to buy property, the more also you would find companies like Turnall increasing their production. So I really think that the prospects of the company has got a whole lot of bearing around economic reignition. If inflation stabilizes, if our currency stabilizes, people are able to save, people are able to commit long-term and for long-term projects such as house building and so forth. So I really think that they do have got a brighter outlook. The backlog really in terms of housing upwards of 1 million. So I think they do have good chances to play it out over the outlook
Talking
period.
about a housing backlog and the housing situation in our country, the Minister for Basic Housing and Amenities, Daniel Gadwe, was in the press 4 weeks back stating that government has set aside $600 million over the next set of years up to 2030 to try and construct up to 2 million housing units. The feasibility of that, and do you think it would have a trickle-down effect on Turnall? Lastly?
Yes, but I think I would hasten to also say Turnall, it produces high-end products. They have been moving away from asbestos, and obviously the kind of roofing material that they produce is tiles, which are normally for the high end of the market, and most of these government constructed houses, they are more on the low end. So, but they do have got products that speaks to that market. So yes, they will benefit, but as you know, nothing is very much certain in this economy.
Thank you, Respect. Thank you, Vias, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our informative website, www.equityaccess.net. Ibn Mabunda, your money man from Harare. This is Equity Access.